The UK's decision to leave the European Union continues to cause economic uncertainty across the world. Asian stocks fell during early trading on Monday morning, although Japan's Nikkei gained back some of the ground lost in Friday's turmoil, climbing 1.8%. But in South Korea and Hong Kong, shares opened down, and the British pound has tumbled another 2%. Pamela Ambler joins us from Global Financial Centre Hong Kong for more on how the Asian markets are reacting. Pamela, there was some speculation that the damage would be reasonably limited in Asia. What are you seeing so far?
Yes, well, the markets here are still struggling after the shake-off on Friday. The vote to leave certainly highlights the uncertainty around free trade and globalization. Those are tides that do not lift all boats. That was reflected in the morning trading session. We saw the MSCI Asia Pacific ex-Japan down about 1%, which is a lot less of a sell-off compared to Friday. A lot of the financial stocks, both here in Hong Kong and in Australia, suffered the worst losses, those seen as having the most exposure to the Brexit, and also that it might be losing its very valued EU passport and or its financial position as a global trading hub. Now, safe haven assets are still seeing a lot of money pouring in government bonds, in precious metals. There is, although, a silver lining, which is the fact that in the near term, interest rates are unlikely to rise, which would in turn be a good thing for Hong Kong and regional markets in Asia.
Pamela, central banks are being proactive. For example, the People's Bank of China was one of the first to take action this morning. What are they doing to stabilise the currency?
Yes, well, everyone's defending their currency after Friday's shakeup. Now, the PBOC, China Central Bank, they weakened the yuan fixing by 0.9%. That's the most since August of 2011 for the offshore. Now, the AIIB, Asia Infrastructure Investment Bank, which is Asia's answer to the European Central Bank, they are saying that the Chinese currency is at fair value at the moment. Premier Li Keqiang, he came out and talked about how there might be a butterfly effect, but the economists are reminding people to keep in mind that exports for China to the UK still on average stands a small portion in the overall exports. So therefore, unless the contagion spreads to all of Europe, China is still quite insulated.
Pamela Ambler in Hong Kong, thank you.